Imagine this. You've worked hard to start your small business. You've got customers, products, maybe even a tiny office. But then, the bank calls. A payment didn't go through. Your account is frozen. Or worse, you're paying hundreds of dollars in hidden fees you didn't even know existed. That's the scary side of business banking that most owners never think about until it's too late. But here's the good news. In this video, I'm going to share the small business banking tips every owner needs, so you can save money, avoid traps, and set your business up for long-term success. And there's one tip in the middle of this video that could literally decide whether your business survives or shuts down. So stick with me, because you don't want to miss it. Number 1. Choose the right type of bank account. Most beginners make the mistake of using their personal bank account for business. It feels easier at first, but it's a ticking time bomb. Why? Because when tax season comes, you'll be digging through receipts, trying to separate personal spending from business spending. That means higher stress, higher risk of mistakes, and possibly even trouble with the IRS. The smarter move is to open a dedicated business checking account. This way, all business income and expenses are in one place. You get clarity, clean records, and often, perks like free wire transfers or better digital tools. Example, let's say you sell custom t-shirts. If a customer pays you $500 through PayPal and it goes to your personal account, it mixes in with groceries, Netflix, and rent. When tax time hits, you're lost. But if that same $500 goes into a business account, you know it's all business income. Simple. Number 2. Pick a bank that matches your business style. Not all banks are equal. Some are great for local businesses. Others are built for digital nomads or e-commerce owners. The trick is to match your bank with how you actually run your business. If you're the kind of owner who visits the branch often and deals with cash, a local credit union might be perfect. They usually have lower fees and friendlier staff who know you by name. But if your business is mostly online, you'll want a bank with powerful apps, integrations with payment processors, and 24/7 customer service. Example, imagine a bakery owner who deposits cash every day. An online-only bank won't help much, but a boutique marketing freelancer who never handles cash. An online bank with no monthly fees could save them hundreds every year. Number 3. Always read the fine print on fees. Banks are sneaky. They know business owners are busy and won't always notice small charges. But those small charges add up fast. Common fees include minimum balance fees, transaction limits, wire transfer charges, and even fees just for talking to a human teller. Example, a business owner I coached once kept only $2,000 in his account. His bank required a $5,000 balance to avoid a monthly fee. He paid $25 every month for 2 years. That's $600 gone just because he didn't read the rules. So always ask, what's the minimum balance? How many free transactions per month? What's the cost of wire transfers? Write it down and compare banks side by side before choosing. Number 4. Separate accounts for taxes and savings. Here's a tip most beginners miss. Create at least 2 accounts beyond your checking. One for taxes and one for savings. Every time money comes in, immediately move a portion into your tax account. A safe rule is around 25 to 30%, but check with your accountant. That way, when tax season comes, you're not panicking about a giant bill you can't pay. And the savings account, that's your emergency fund. Businesses face surprises. Maybe your equipment breaks. Maybe sales slow down. Having even 3 to 6 months of expenses saved can be the difference between staying afloat and shutting down. Example, a landscaping business had to replace a $4,000 mower. Because they had savings, they paid for it without debt. Another business without savings might have maxed out credit cards and paid thousands in interest. Number 5. Use merchant services wisely. If you take credit or debit card payments, you'll deal with merchant services. But here's the trap. Different banks and processors charge different rates. Even a difference of 0.5% matters. If you process $100,000 a year in sales, a 0.5% difference is $500 straight out of your pocket. Example, one coffee shop switched from a processor charging 3% to another charging 2.5%. That 0.5% saved them $2,000 a year. That's a vacation, new equipment, or extra payroll. So always shop around, compare, and negotiate merchant service rates. Number 6. Build a relationship with your banker. This might sound old-fashioned, but it works. Having a banker who knows you and your business can unlock doors when you need them most. Imagine needing a loan quickly. If your banker knows you, trusts you, and has seen your clean records, you'll have a much smoother process than someone who's just a name on an application. Example: a restaurant owner I knew had a pipe burst, costing thousands. Because she had a long-standing relationship with her banker, the bank approved a small line of credit within days. Without that connection, her restaurant might have stayed closed for weeks. Number 7. Keep your business credit separate from personal credit. Many new owners use their personal credit cards or personal loans to cover business costs. But that puts your personal financial health at risk. The smarter play is to build business credit. Start with a business credit card. Pay it off monthly. Over time, your business builds its own score. This helps you qualify for bigger loans, lower interest rates, and better terms. Example: a cleaning company owner used a business credit card for supplies. After a year of on-time payments, they qualified for a $20,000 small business loan to expand. Without that credit history, they would have been denied. Number 8. Always reconcile your accounts. Sounds boring, right? But this one habit can save your business. Reconciling means matching your bank statement with your own records. Why? Because mistakes happen. Fraud happens. Even banks make errors. Example: one small shop noticed a $300 double charge from a supplier. Because they reconciled monthly, they caught it and fixed it. Without that habit, they would have lost money for no reason. Make it a monthly routine. It only takes 15 minutes, but it keeps your money safe. Number 9. Use digital banking tools. Modern banks offer apps, dashboards, and automation that can make your life easier. You can set alerts when your balance drops, schedule automatic transfers into savings, and even integrate your account with bookkeeping software like QuickBooks or Xero. Example: a freelance graphic designer set up an alert for low balance. One night, a client payment was delayed. The alert helped him transfer money in time and avoid a $35 overdraft fee. Digital tools are like having a mini CFO in your pocket. Use them. Number 10. Plan ahead for credit needs. Here's the tip I mentioned earlier that could decide whether your business survives or shuts down. Never wait until you desperately need money to ask for credit. Banks lend to those who look safe, not those who are already drowning. That means you need to apply for a business line of credit while times are good. Even if you don't use it right away, it's there as a safety net. Example: a retail store applied for a $50,000 line of credit before the holidays. Sales dropped in January, but the line of credit covered payroll until business picked up again. Another store without credit had to lay off staff. So don't wait. Build credit early, so you have it when it matters. Number 11. Watch for fraud and scams. Small businesses are juicy targets for fraud. Hackers, fake invoices, even dishonest employees. Banks often offer fraud protection services. Things like alerts for unusual activity, positive pay for checks, and multi-factor authentication. Example: one business owner received a fake email invoice that looked real. Because she had set up two-step verification with her bank, the payment didn't go through. That single layer of protection saved her thousands. So always ask your bank what security tools they offer and use them. Number 12. Think long-term, not just today. When choosing a bank or setting up your accounts, don't just think about what you need this week. Think about what you'll need in 2 years. Will you need a loan to expand? Will you want international payments if you grow online? Will you want investment accounts for surplus profits? Example: a small candle business started at farmers markets. In 2 years, they were shipping worldwide. Their local-only bank couldn't handle international payments, and switching banks was a huge hassle. If they had planned ahead, they could have avoided the headache. Always think about the future path of your business, not just the present. Number 13. Understand cash flow management. Cash flow is the lifeblood of your business. Even profitable companies can go under if cash is not managed well. Your bank account should help you track inflows and outflows in real time. Many banks provide dashboards or export tools that make this easier. Example: a construction company had steady sales but often struggled to pay suppliers because payments from clients came in late. By using their bank's cash flow forecasting tool, they started planning ahead, negotiated better payment terms, and avoided late fees. Number 14. Use business debit and credit cards strategically. A debit card linked to your business account is great for controlling spending and avoiding debt. But a business credit card, when used wisely, gives you rewards, protections, and builds your credit profile. Example: a bakery used their business credit card to purchase flour and supplies. By paying it off each month, they avoided interest, earned cashback rewards, and built their business credit score at the same time. Number 15. Take advantage of treasury or cash management services. Some banks offer services that go beyond basic checking and savings. These include automatic sweeps into interest-bearing accounts, lockbox services for faster payment processing, and tools for managing multiple accounts. Example: a mid-sized e-commerce seller set up automatic sweeps so extra funds above $10,000 move daily into a high-yield account. Over a year, this simple step earned them hundreds of dollars in extra interest. Number 16. Explore small business administration loan programs. Many banks partner with the SBA to provide loans that are easier to qualify for, with lower interest rates and longer repayment terms. These can be game changers if you're starting out or trying to expand. Example: a restaurant owner needed $150,000 to remodel and expand seating. Instead of a regular loan at a higher rate, their banker helped them apply for an SBA-backed loan with friendlier terms that saved them thousands over time. Number 17. Monitor account integrations with bookkeeping software. Linking your bank account with accounting tools like QuickBooks, Wave, or Xero can save hours of manual work and reduce errors. This ensures that every transaction is automatically categorized and ready for tax filing or financial reports. Example: a freelance photographer linked her bank account to bookkeeping software. What once took her 5 hours a month to update now takes less than 20 minutes. Number 18. Ask about industry-specific banking perks. Some banks design packages tailored to certain industries like healthcare, retail, or real estate. These packages may include fee waivers, lower transaction costs, or access to special lending programs. Example: a dentist opened an account with a bank offering healthcare-focused business accounts. They received discounted credit card processing rates and access to specialized equipment financing options. Number 19. Use international banking features if needed. If you buy supplies from overseas or sell to international customers, ask your bank about foreign currency accounts, low-cost wire transfers, or international payment platforms. Example: a handmade jewelry seller on Etsy started shipping to Europe. By using a bank with low-cost international transfers, she saved hundreds of dollars a year compared to PayPal fees. Running a small business is already hard. You juggle customers, employees, taxes, and countless decisions every day. But with the right banking setup, you remove one of the biggest headaches and protect your business from financial surprises. Which of these tips do you think will help your business the most? And do you already have a system in place, or are you realizing now it's time to upgrade your banking game? Share your thoughts below.